I think in the meantime, you just have to be very cautious and you have to keep it very liquid. That's the important thing. I mean, what's really putting pressure on the equity markets at the moment is actually the liquidity from the credit markets. And you have to identify which stocks or which credits are going to bounce back first, because clearly, China will bounce back economic-wise before the rest of the world, but only certain sectors will work. I think the signs from Wuhan that of the lack of cases is very, very encouraging, as I think is the lack of cases across Asia. We are beginning in the last 3-4 days we've seen more cases in places like Hong Kong and Singapore from inbound travelers. Now the borders are really shut. I expect we'll get a much better picture in 2 weeks.
Okay, Sean, so then let's deal with the issue of the hour, and that is the liquidity concerns. I mean, the ECB coming out trying to alleviate concerns as to what they can do at this stage. But what about from the Fed? I mean, do you think more measures from the Fed can do enough? Because so far the market has been looking through some pretty extraordinary measures.
Yeah, I mean, I think the problem is the Fed measures have been very good, but they're not quick enough to stop the market fall. And I think we got a realization now that the second quarter GDP in the US is going to be like the first quarter in China, and I think that's been factored into market. So the Fed needs to really do what former presidents Yellen and Bernanke are suggesting, and tackle the liquidity problem. Interest rates have gone to zero, but the repo rates increasing a lot. However, compared to 2008, we do have liquidity. The repo market is working, so that's a good sign.
Do we have liquidity? How do you rationalize the kind of funding stress that we are seeing because of shortage of dollars?
Yeah, I mean, you can see it outside of countries where you've got current account deficits. You've got a lot of pressure there, and you've got also a lot of deleveraging. So and I think you've got a lot of people taking risk off, and how you can see why there's no liquidity is in things like Bitcoin and gold. I mean, gold, with all the central bank policy action, should be much higher, but it isn't. People are selling anything they can.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.